The U.S. government is borrowing at record levels, and it's raising eyebrows around the world. In 2025 alone, the Treasury is expected to issue over $3 trillion in new debt. That's not just to fund new spending, it's to roll over old debt that's now much more expensive. Why is this happening, and what does it mean for the economy? But first, how Treasury borrowing works. When the government spends more than it collects in taxes, it covers the gap by issuing Treasury bonds. These are IOUs the government promises to repay with interest. For decades, borrowing was cheap, interest rates were low, demand was high. But that's changed. Today, the average interest on U.S. debt is above 3.3%, the highest in over 15 years. When your total debt is over $35 trillion, even small rate hikes create huge costs. The U.S. is now paying over $1 trillion a year just to service its debt. That's more than it spends on national defense. So, to lower costs, the Treasury has leaned into short-term debt, bonds maturing in 1 or 2 years. Why? Because they have lower interest rates. But here's the problem. That debt comes due fast. This means the U.S. has to constantly refinance, and that makes it vulnerable to market shifts. If investors demand higher yields, or if confidence drops, the Treasury could face a funding squeeze even without a crisis. It's like putting the national budget on a credit card with a 1-year expiration. But who's buying all this debt? Foreign buyers, especially China and Japan, used to hold massive amounts of treasuries. But in recent years, they've reduced their holdings. Geopolitical tensions and currency management have pushed them to sell. So who's buying now? Mainly U.S. institutions, banks, mutual funds, and money markets. And in some cases, the Federal Reserve, although it's no longer buying at the pace seen during the pandemic. This shift raises concerns about long-term demand. If fewer buyers show up, the U.S. will have to offer higher yields to attract capital, increasing debt costs even more. Why should you care? Because U.S. debt costs increasing debt costs even more. Why should you care? Because U.S. Treasuries are the backbone of global finance. They're seen as the safest asset in the world. If that perception weakens, even slightly, it could ripple across interest rates, currencies, and global markets. The U.S. won't default, but trust in its financial discipline matters. So, of course the U.S. can borrow more than any other country, but even it has limits. As debt payments rise and buyers become more selective, the margin for error shrinks. This isn't just a political issue, it's an economic fault line. The real question isn't how much more the U.S. can borrow, but how long the world will keep lending at today's terms.